Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Nio's Nio stock, Sofi Technologies SOFI stock, and Palantir Technologies PLTR stock. For more news updates on Nio, SoFi, Palantir, and other stocks, as well as the overall stock market environment, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. The overall stock market actually surged a little bit yesterday, and that was because the Federal Reserve has signaled that they are going to be less hawkish overall. So essentially, they have been increasing interest rates to get inflation under control by around 75 basis points, and they have done this around 4 times from June to November. However, Jerome Powell, who is the chairman of the Federal Reserve Board, he actually commented and he indicated that the Fed is leaning more toward a 50-point basis hike instead of a 75-point basis hike for the month of December. So this is very good news for the overall market. It means that they are slowly teetering themselves off from increasing interest rates, which will get inflation under control. The Fed normally tries to target inflation at around 2%, but as of late, over the last couple of months, inflation has been out of control, and that's why they are raising the overall interest rates. So essentially, the Fed increasing the interest rate at a lower rate hike than before is very positive for stocks. And in the future, we could see even more positivity because essentially the Fed doesn't want to overdo it for us to start going into a deflationary economy, because inflation is much better than deflation in my personal opinion. This has caused the S&P 500 to surge by around 3.09% and the Nasdaq to jump by around 4.41%. And although that may not sound like a lot, it definitely is, especially if you are already invested into ETFs like VOO or QQQ, which I personally am invested into. So I really liked this overall news, and I hope that the stock market starts to recover very well as the Fed becomes less hawkish and more dovish and lowers their overall interest rate hikes. So that's why we experienced, or if you saw your portfolio, that you had some gains over the past couple of days. But if not, don't worry, let's dive into our first company we're going to be analyzing today, and that is going to be none other than Nio. Nio is an electric vehicle company, and their ticker symbol is NIO, and it currently trades for around $12 per share, while professionals believe the company should be trading anywhere between $11 on the low end and $50 on the high end. And the main reason why Nio is in today's story is because we did a Nio video right before it surged by around 20%. So I'm going to talk to you about why the company surged. Mainly, it was due to 2 amazing catalysts. Like I said earlier, Nio is a leader in the electric vehicle premium smart EV market, and it has recently announced its delivery results for November of 2022, where they delivered around 14,000 vehicles in that particular time frame, which is a new record high on a monthly delivery basis, which represents an increase in growth rate in their deliveries of 30.3% year over year. So this is very good news for Nio overall. What's even better is that Nio is projecting to actually accelerate their overall deliveries as we go into December, and that's where we are at right now. On top of that, this is a mini catalyst. Their ET7 actually was awarded the maximum 5-star rating in the latest safety tests, and this was awarded to them from the NCAP, which is absolutely amazing. Not to mention the other catalyst which caused the stock price to surge in Nio is that Nio has entered into a strategic cooperation and collaboration with Tencent Holdings Limited, and this is absolutely amazing. So let's dive in to the actual terms of this overall agreement. Well, starting off, this is really good news because essentially Tencent is going to be able to make Nio's overall technology even better. Like I said, we've seen some very positive volatility in this overall share price, where the share price surged by over 20% at one point. So why are investors so excited? Well, Tencent Holdings, if you don't know, is a technology giant, and they're going to help Nio develop better autonomous driving technology and high-definition mapping systems for their vehicles. This is going to put Nio leagues ahead of a lot of their competition, and it's going to be beneficial for both Nio and Tencent. On top of that, Nio's revenue also jumped by around 32.6% year over year to $1.8 billion in the third quarter. So with Nio increasing their overall deliveries and growing their overall revenue on top of landing a great strategic partnership and collaboration agreement with Tencent, Nio is primed for growth right now. The only thing you may want to watch out for is geopolitical tensions between the West and the East, particularly the United States and China, because if anything goes sour politically, these share prices are going to drop like a rock. So that's the risk you take on by investing into ADR shares in a company that is overseas. So overall, if you're looking at this company from a long-term perspective, Nio is primed for future growth, and it's really trying to differentiate itself from other electric vehicle competitors by landing agreements and partnerships with Tencent, particularly to diversify their overall technologies as well as their products and services which they can give their consumers. So this is a very good thing for Nio, and that's why the share price absolutely surged after I reported on the stock previously. Next up, we're going to talk about Sofi Technologies, and Sofi pulled back a little bit due to very bad PR that came out about them. Now, this negative PR is completely overblown. Essentially, some people are criticizing Sofi Technologies because in one of their commercials and in one of their ads, they're being criticized because they featured a Jewish man as a professor. Well, it's funny because the people who watched the video thought that the Jewish person was actually a banker, so they were thinking that Sofi was stereotyping a Jewish man as a banker, but they're completely wrong. Sofi actually had him more as a professor archetype, and guess what? Newsflash, Jewish people, they can be professors or bankers, it really doesn't matter, and Sofi was not purposefully trying to be controversial or anti-Semitic in any way. People are completely blowing this out of proportion, and it's giving Sofi bad public relations and bad marketing. So these people clearly should have something better to do instead of trying to make something racist when it clearly wasn't. So that's my 2 cents on the PR fiasco. But what about Sofi as a company? Well, the main question that investors are asking right now is, will Sofi hit $10 in 2023? Well, let's go over all of the numbers. If you're not familiar with this company, Sofi is a financial technology company that operates as a digital bank, and so far it's been doing pretty well. But the share price is still falling. It's fallen more than 70% this year, and this is mainly due to the macroeconomic uncertainty. So investors are wondering, could this company get back to, let's say, around $10? Well, let's dive into it. Right now, investors are fearful and liquidating their risky growth stocks because of rising interest rates, a very volatile stock market, uneasy and ambiguous macroeconomic conditions, and an overall bleak economic GDP outlook in terms of an overall recession, which many investors believe will take place sometime in 2023 or 2024. So now let's go over and talk about if this company can reach $10 per share in the year of 2023. Well, for this, you all know me, I love looking at the fundamentals of a company to see where it's headed. Sofi Technologies has had a plethora of things go wrong with them in the media, such as the student loan moratorium, student loan forgiveness, and them being called out for their potential unpermissible cryptocurrency activity. But again, that is complete speculation, but it's made investors scared enough to liquidate this company. And that's why we see on the overall share price investors liquidating and pushing the price even further downward. But let's see, can this company hit $10 in the next year? Well, currently, Sofi is projected to generate around $1.52 billion worth of revenue in the year of 2022, and based on its market cap of $4.2 billion, it trades at around 2.7 times their 2022 revenues and close to 34 times their overall adjusted EBITDA. So what can we do with this financial information? Well, we can use current projections from analysts who also believe this company could bring in around $2 billion in 2023. And after all, we're trying to project the share price in 2023. So what would have to happen for this company to reach $10 per share? Well, if they're only bringing in $2 billion worth of overall revenue, would that be able to justify a market cap of $9.3 billion? For instance, if the share price surges to $10 per share, that is naturally going to move their overall market capitalization billion up to $9.3 billion. And if they're only bringing in $2 billion worth of revenue, a $9.3 billion market cap probably is not in the cards for this company. Because that would mean that they're going to be trading at around 5 times their revenue, which is far greater than what they're doing right now, where they're only trading at around 2.7 times. So ideally, this 2.7 times projected revenue is supposed to stay somewhat consistent if we're trying to project their future share price. If you're willing to hold this company for the long term, such as until 2025 or beyond, it still could be a good investment opportunity, but don't get your expectations too high. This company probably won't hit $10 in 2023, but again, that's just this author and the numbers that he's using, and I somewhat agree with him. So I'd love to hear your thoughts down below. The next company we're going to talk about is none other than Palantir Technologies, ticker symbol PLTR. And Palantir is a big data and analytics company that serves both commercial clients as well as government enterprises. And they recently partnered with Lockheed Martin to improve their overall technology for a Navy contract. Right now, the PLTR share price trades at $7.85, which I think is somewhat overpriced considering the overall revenues the company's bringing in, their growth rate, and the current macroeconomic conditions for the economy. However, analysts believe this company could be worth anywhere between $5 and $15 over the next 12 months. I'm only going to go over some pointers and the main takeaways that you need from this certain collaboration, but if you want more information on this particular collaboration between Palantir Technologies and Lockheed Martin, I will also link this extra article in the description box down below so you can read up on it for yourself. So like I said, Palantir has partnered with Lockheed Martin, and this is a great partnership. Lockheed is one of the larger government contractors up there with Raytheon, L3 Harris, which I think is just now called L3, and Northrop Grumman. So this is a phenomenal partnership. And essentially, these two companies are in a collaboration with one another to modernize the Navy's combat systems for their surface fleet. Now, what I do find interesting is that the financial terms of this partnership have not been released yet. They have remained undisclosed. So I'm really hoping that this is a giant contract. And if we are looking at this from a realistic perspective, I do think this is going to be millions of dollars. On top of that, Palantir's COO said, and I quote, "We believe that by sharing our approach through the Apollo product, more customers can take advantage of the autonomous deployment approach." And following this comment by Palantir's COO, the vice president and general manager at Lockheed Martin said this: "Lockheed Martin is investing in skills, capabilities, tools, and infrastructure to deliver the best software to the warfighter efficiently and affordably. Palantir's Apollo is central to these efforts. Apollo addresses last-mile delivery challenges and performs automated software deployment and management across secure government networks, cloud environments, and on-platform environments." End quote. So overall, these are really good comments about this contract, and hopefully this collaboration leads to even more collaboration and networking in the future. So overall, we've had a great news update. I would love to hear your thoughts down below. Remember to go and comment, smash that like button for more videos just like this one, subscribe if you are new, and I will see you in the next YT video.